This is Sunday, but this is a review of week ending June the 14th. Let's take a look at the three markets. The thing that strikes you first of all, again, is the relative volume is very low in the Dow 30. NASDAQ a little bit higher and the S&P a little bit higher. Mixture of red and green everywhere. Decliners led advancers by 2 to 1, and that's a big deal. And we're going to look at the oscillator now. And you see the oscillator's churning in between the zero line, where as much money is moving out of the market as is moving into the market, and the first level of being overbought. And then down here, of course, would be oversold. So we're going to find ourselves with this 2 to 1 very close now to this midline again. And I'm afraid we could be on our way down with money coming out of the market. And remember, this week on Wednesday, the Fed will conclude their meeting, where the market has been hoping, based on some of the things that have happened recently, like a lower jobs report and a higher unemployment filing report, that maybe the Fed is going to step in and save this economy, this so-called booming economy. But the more I'm reading says it's not going to happen, but that the Fed will provide language that will make people comfortable that it'll happen in July. So that means on Wednesday afternoon there could be a reaction either way, up or down, and then there could be a reverse from the initial reaction. But as we get to it on Tuesday night, I'm going to talk about what my positions are going to be, and I think that I am going to be very conservative, and I'm either going to be buying a lot of SPY puts, or I'm going to be selling a lot of calls. I won't be selling any stock, but I'm going to be doing something for protection. So let's take a look at the S&P 500. We are still playing around in the cloud. The Chiku span that we've been watching didn't stay on the top of the candle, but it didn't lose that candle and end up below the 50, which would have been difficult to climb back up through all of these moving averages and these candles. So we stayed above there, but we still have our indicator. This green line here is still the where the 8 moving average would meet with the Chiku span, and that is where at 2900-ish, 2907 is where we would meet resistance. And we're also going to meet it at the top of the cloud. So we pointed this out, that the Chiku span and the 8 EMA is also the same place as the top of the cloud on Friday. The top of the cloud on Monday is going to be significantly lower. So resistance is going to come at around 2897. Let's call it 2900. If we look at the weekly to get a bigger picture, we still have the Chiku span out here in the wild, and we finished the week on a little bit less than the doji. We're not going to come back to this flat cloud, but there may be a plateauing and a tendency to come back and test support on this cloud, which is already starting to decrease. So this is not really a very good looking cloud system for us. There's nothing in this setup here that says that should we test this double top a third time, that there's any reason we should break through it. I would be willing to bet there's a ton of sellers waiting at 2940. Caterpillar had an overall good day. It is still a 3-point-something% dividend stock, and it had an overall good week. Gold and the gold miners are our pleasant surprise, now at 23.33. And look at this nice little run since we've done this bottoming at the 200 simple moving average. We've now had a cross of the 50 EMA and the 200 EMA. That is bullish. And we see as soon as that happened, we had this leap in the gold miners, a bit of a pullback, a test to see if there were buyers at the 8, and then some steady move up. So the gold miners is a good place to be, and further support, I think, that people are getting ready on Wednesday for not necessarily a positive announcement in the Fed that's going to really please the market. Let's look at gold miners on a weekly basis, and the Chiku span ended just above the cloud. Very nice, indicating good strength in the gold miners. There's an all likelihood that we come down and test that again just to make sure that there are buyers, and we're going to resume up, and we're looking at a target of $24.32, which would be the 32% retrace from this high to this low. So the last wave saw a pullback to about 61.8%, where we spent 2 days below 61.8, the golden ratio, and then we moved up, came back down, spent quite a bit of time below the 61.8, but now are resuming our move upwards. Whirlpool, I am still in the 135 short calls that will expire this Friday. I expect that by Monday afternoon or Tuesday, I should have made 60 to 70% of the anticipated profit in that covered call move. And if we end up above 135, 136, I will be doing 137.50 short calls, maybe this week, maybe next week, depending on what the premium is. But look at the Chiku span right here. The Chiku span is poised to take advantage of this gap and move right on through. The only thing stopping it are two 50 moving averages, the 50 exponential moving average, the solid blue, and the 50 simple moving average, the hashed blue. So we're going to see resistance at both of those levels, but look what we have up here. We have price being rejected from the bottom of the cloud, and if we do get resistance on the 50s, that is going to be right around the top of the cloud. But there's an excellent opportunity for Whirlpool this week, Monday, Tuesday, but Wednesday, barring being above the cloud or having worked itself down here, thin clouds are very easy to penetrate, and if traders see trading in this area with a thin cloud, there's going to be some incentive to buy the stock and move through this area of very, very weak resistance. Our last stock is WDC, which is still underperforming. Unlike AMD, which I'm told is doing quite well, some of the other chip stocks are not. So bottom line, Monday and Tuesday are going to be wait and see days, because Wednesday is the big Fed announcement where the market may have priced in a lowering of the Fed interest rate by maybe 1/4 of a point. If it is priced in and doesn't happen, the market is going to take that back and set itself up for July.